Welcome in, folks. It's a four-piece here today. 4 videos up for me to react to. It's a buy one, get 3 free in this one. First one up here, we're going to hear Josh Brown and a few others talk about a few different stocks, including eBay. Josh Brown buying eBay? What in the world is going on? Okay, that should be interesting. Then we're going to get into Oracle for just a moment here. Oracle's having a huge day. We're going to talk about if there's an opportunity in Oracle stock. I want to share my opinions and perspectives on that. Then we're going to get into this one. Stephanie Link buys more Apple. Okay, so that should be an interesting one to react to there. And then last one up here is in regards to CPI, the numbers from today. I want to kind of share those numbers with you guys and then kind of, tell you what my opinion is, what this means for the Federal Reserve. Are they cutting soon? Are they not going to cut soon? What are we looking at as far as that goes? Hope you guys enjoyed today's video. As always, appreciate y'all. I'll ask in return, smash a thumbs up. Make sure you're subscribed to the channel. Appreciate each and every one of you. We're 41,700 plus strong. Now at this point in time, if you're looking to apply, join my private group, that is going to be the pinned comment down there. Get access to all my course curriculums, teaching you everything I know up here. Also get access to my 6, 7, 8-figure Discord chat, all that good stuff. Let's get into this.
To get through from the committee today, and we're going to start there. And we're going to start with Josh Brown, who bought a few new things. I want to tell you about all those. You bought eBay, which hit a 52-week high on Monday. That's the highest since February of last year. Tell me why that one has been added to your portfolio.
So this is a breakout in progress. It got above long-term resistance, which was 48. I think it'll hold that level, but we'll have to see.
Okay, right off the bat, it's very important you understand. If you hear somebody is buying a stock, right? Very important you understand the reasoning. Like, when somebody goes in their first 10 seconds to tell you why they bought a stock, if the reasons are not around financial statements and growth rates and PE ratios and things like that, then it's technical related, right? This is clearly a technical related buy that Josh Brown made here.
This is the highest level eBay has traded at really since April of 2022. It had been in this range between 38 and 50 since the summer of 2022. So this is basically a stock that can't get arrested. They've had literally no support whatsoever anywhere on Wall Street. Nobody wants to talk about it. It's 10 times earnings. We know the reason why it's 10 times earnings. Facebook came into the marketplace business a few years ago, stole some of eBay's thunder. There's not a lot of growth here, but that's the point. You're not paying for growth. At this point, you're paying for nothing, and they have accelerated the rate at which they're returning capital to shareholders. It's a 2% dividend yield, and buybacks are going up. And they've got a CEO in here who actually was very instrumental in this company during a higher growth phase, who is now back. And I think there's more to be said about the future. So I think it's very low risk here. I have a stop loss. It's not necessarily.
So right there, he went into fundamentals, but whenever you start out talking about technicals, that's always the main reason you're buying, right? You're always, if you're going to give your bullish thesis on a stock, you're always going to give your main reasoning up first and foremost, right? And so clearly it was a technical buy, and then he's trying to back it with the fundamentals, 10 PE. He's talking about the CEO, those sorts of things.
Term investment, but I like it from a trading standpoint.
Okay, keep an eye on that as it gets a little bit of a move here. So we've been talking a lot about the NASDAQ. We obviously been talking a lot about the NASDAQ. You bought the actual exchange stock, NDAQ. Tell me why you bought NASDAQ.
NASDAQ also a breakout in progress. This has an RSI of 75. So it might need to cool off a little bit. It's 13% above its 200-day, 5% above the 50-day. NASDAQ broke resistance at 58. So you can see clear as day on the chart. Every time it bumped up against 58, 60 bucks, it fell off. Now it's above. NASDAQ is the #1 play if you believe capital markets return in the second half of this year, as I do. I think we're going to see IPOs. I think we're going to see a lot of activity, and not just in the United States. NASDAQ is operating exchanges all over the world, and they did something really smart. While nobody was paying attention, they went from being just an exchange business to really being a financial services business and software company. And so they've got now 3 different businesses under the one NASDAQ umbrella, all of which have the ability to kick in earnings and revenue growth this year. And you had some insider buying in the stock over the last year as well. So I like the stock here. I think get into the 70s. Again, it's a trade. I have a stop loss in place, but it's a breakout in progress.
Yeah, I hear you. Another bump there. CBRE. Tell me about that one. That's also new.
Yep. Similar to a lot of the things that I talk about on the show, I like these businesses where you've got a technical breakout, but you've got a fundamental reason that the market is only just now discovering. If you were to talk about CB Richard Ellis or Jones Lang LaSalle or Cushman & Wakefield over the last year or two, everyone would tell you, oh, you're an idiot. Commercial real estate is dead. It's going to be a depression, blah, blah, blah. They don't understand the business model shift underway here. Do you think that's news to CBRE, that there's going to be some challenges in commercial real estate values? Like, honestly, how childish can you actually be? So what this company has done over the last couple of years, knowing what the marketplace would be like, is they've shifted into a much more services-heavy ARR software-like business model, where basically they benefit from the volatility because they become the go-to player for every corporation in the world. And by the way, this is global, trying to figure out their real estate portfolio, right-size their leases. What do they own? What are they renting? What do they need? What do they have to get rid of? CBRE is going to get paid on this stuff coming and going. It's not just about transactions. Now it's about facilities management. It's about loss mitigation. They're in the mortgage business, et cetera, et cetera. So this stock's breaking out. There's a reason why. People understand this. There was a lot of resistance at 87. It hit that level 3 times. Fourth time was the charm. And again, this is a trade, but I think we could see the stock north of 100.
Okay, do I like any of those 3 stocks, CBRE, NASDAQ, or eBay? The answer is no, I don't. I don't like any of those 3. If you force me to buy one, I would buy eBay. It is a cheap valuation play, right? And it is a fairly stable business model, as we know, right? But yeah, to be honest, none of those 3 are very intriguing to me. But once again, if you're playing from a trading perspective, that might be a whole different story. But I'm thinking about investments, right? I'm thinking about companies I want to own for the next 3, 5, 7 years. And just those 3 are not very compelling. But this next stock might be a very different story. Let's speak about Oracle.
So it leads the S&P today. Look at that nice chart, almost 12%. Jimmy, you own it. And this was the stock going in that, with all the AI hype seemingly everywhere else, this thing got none of it.
Yeah.
None of it. And here we are post-earnings, and it's getting a nice bump. I'm not saying it's AI, but finally this stock's doing something.
Well, it was doing something until 6 months ago, and then it had 2 quarters in which what it did was it said, hey, we're building out these data centers to support our cloud initiative. But in those 2 quarters, they weren't showing immediate results. This is where a long-term investor says, do you trust the management? Do you trust the strategy? And we did. And the strategy is paying off. So those data centers that they built, they're pretty much all being used right now. They need to build more because orders are piling in. Their backlog is tremendous. There's no more discussion about whether they should be building these data centers. It's how many more of them should they be building. The stock's up a lot today, and that's just recovering what happened over the last 6 months. I think it's going meaningfully higher from here. If I look at yesterday's analyst estimates, we're trading at something like 20 times fiscal year 25's estimates, and their fiscal year is May. That's why I'm looking at fiscal 25. Those estimates are going to go up. Morningstar has it at 18 times fiscal year 25 estimates. Estimates are going to go up, and for good reason. The stock is undervalued at this price.
So it hits a new record high today. Josh, you used to own it, and it wasn't that long ago.
Yeah, I think I sold it around here, actually. This is a great move. Look, the revenue shortfall wasn't that big of a deal, apparently, because what people want to hear more about is demand related to AI. And those are the magic words. If you say those words in a press release or on a call, you have everyone's attention, and there's more buyers than sellers. So Oracle's delivering. It's not a fast growth name. It's certainly not the biggest name in cloud, but they made the decision a couple of years ago to go all in on cloud and focus more on that than database or just traditional software, and it's worked. So I don't really know what else you'd want to hear from this company.
Yep, big day, better than 12% now. So we're at the highs of the day for Oracle.
So, do I like Oracle stock? And the answer to that is yes. I do like Oracle stock. I really do. I don't personally own the stock, but with that being said, would I mind owning it? No. I don't like their balance sheet. Their balance sheet, bad. Especially for a big kind of, you put them in the big tech category, right? Considering they're with a lot of the best balance sheet companies in the world they get grouped into, their balance sheet's bad. But with that being said, outside of that, basically, I like everything with the company. I like the management team. I like the growth rates. I like the different segments that they're growing into. I like the valuation. It's trading a little over a 20 forward P, and that's actually relatively low if you compare them against a lot of other, cloud-related companies or, higher growth companies. 29% growth in the most important segment for them, in my personal opinion, this past quarter. That was very strong, and backlog growing very nicely. So I like Oracle. I wouldn't mind buying the stock today. I'm not buying the stock today because there's a lot of other opportunities in the market. But with that being said, if you forced me to put 100K in Oracle stock, I would have no objection to that. I think I would be just fine over the next 3 to 5 years in that one. So I do like Oracle. Next one up here, Stephanie Link buys more Apple. This should be interesting.
Other committee member, and it's Apple, which has had no momentum, to say the least. And today, in a market in which you're getting a bounce in NVIDIA and Microsoft and Meta and Amazon and Tesla and Alphabet and AMD and Uber and Costco and a lot of these big momentum moves, Apple's red. And yet you've bought a good amount more. You've added substantially to it, you say, which is now a 5% position. Talk to us.
Yeah, and it held up better than the big six, if you will, over the last couple of days. This is not a Mag 7 play at all. This is a stock that's down 13% from its highs. We know that the numbers have come down for the April quarter. We know that already. We know that China is weak and continues to be down double digits. But I do think that the April quarter will be better than expected. I think services will continue to grow double digits. I do think that the earnings picture will be double digits. Margins will continue to be a bright spot.
So I wanted to pull up for you guys the estimates here for Apple for next quarter. 151 expected. That is down about 1% year over year EPS wise, and then revenue down 4% for the company. So, maybe she's onto something about a potential beat. But yeah, if they miss that, it's going to be pretty embarrassing because you already expected 4% down.
Margins will continue to be a bright spot. iPhones are not going to be a bright spot, but I'm not buying it for that. I'm buying it because the stock is down a lot. It's trading at 26 times revised numbers. Historically, it's traded at 36 times, so I think it's actually a bargain. April quarter, I think you're going to get a buyback, a new one. Maybe it's $90 billion. They could certainly do more. And then in June, we get WWDC. We'll hear a little bit about AI and what that means for iPhone 16 and the pricing power that they're going to have. So I've been underweight this name for a long time, and I'm still underweight because it's 7% on my bench. But I do think it's an opportunity.
This is always sort of viewed as what you mentioned, the buyback being a bit of a backstop, if you will, right? Because they buy back more shares than anybody else.
Sure.
So they're going to, ideally take advantage of what's happened to that stock. But something's peculiar, though, when this thing just can't get out of its own way lately. And what gives you the confidence that it's going to be able to do that?
Well, I don't have the confidence that it's going to start working tomorrow, but I do think that this is an opportunity for the longer term. AI, even if they make some good announcements in the summertime, it's going to take a long time for that to kind of go through and filter into the numbers.
I'll tell you what's actually going on. They just don't know where the growth is coming from, in the future. And outside of a next hit iPhone, it's hard for people to see where the growth opportunity is in this one because Vision Pro is just not it in terms of that major growth, at least anytime soon, until they get a price point that is acceptable for most folks.
I just think right now it's so down and out. It's so really not liked at this point in time, right?
That's an understatement, right?
You've had a lot of downgrades, and that's fine. I understand why there would be downgrades. I'm trying to take the other side of that and trying to think a little bit longer term because I still believe in this company and this story and the products.
Okay.
Yeah, technically it's always a fine buy, but it's just like, are you going to make much money in there versus a lot of other opportunities? CPI.
At the CME in Chicago. Rick, take it away.
All right, our February read on the Consumer Price Index headline number expected to be up 0.4%. is up 0.4%. Now, if we look at the most recent lower number in this series, we had 0.3 in January, and we had 2.2s in November and December. So this is now a firming issue as we've had back-to-back reads we had up 0.4, now ex-food and energy also up 0.4, 1/10 hotter. So we have back-to-back on headline and core up 0.4%. Now, 0.4 equals the look we had last month on core, and the most recent lower number was October. That was up 0.2. That happened to have been the lowest since Feb of 21. So we're firming here. Now, the year-over-year numbers also hotter than expected. 3.2 on headline year-over-year. That's 3.2. That would be the highest since Deese when it was 3.4. January remains at 3.1. If we look at year-over-year core, 3.8. Now, this is interesting. This is 1/10 hotter than we were expecting, but it's cooler than the rear view mirror because we had back-to-back 3.9s, which were the lowest since May of 21, which was 3.8, which equals our current read. They find a lower read on core year over year. You're going back to April of 21 when it was 3.0. It should come as no surprise that interest rates shot up in 10-year up to 4.13. They're hovering around 4.11.
So first off, we don't want to see, obviously, the CPI come in hotter than expected. And that's exactly what happened, right? 3.2 versus 3.1. It's not the biggest deal in the world in terms of like, oh my gosh, can you believe how bad it is? But every time one of these readings, it's important everybody understands this, okay? Every time one of these readings comes in hotter than expected basically meaning it's above where it was supposed to be. Every single time that happens, it pushes out the chances of the Federal Reserve cutting rates, right? And the market obviously wants the Fed to cut rates. They want the Fed to cut rates because it's going to ease financial conditions. They want to do that so it pushes off the risk of recession, at least a decent amount, right? Because the longer rates are in a higher place, the higher probability we're going to run into a recession. And so everybody's looking for that. Everybody wants that. But when you have CPIs come in hotter than expected, Jerome Powell and the Fed, they have to look at that and they have to say, you know what? I don't know if we're gonna cut anytime soon, right? And so it pushes out that whole situation, and then the market kind of gets, sometimes it can get a little freaked out. But once again, this isn't like the worst number. 3.2 versus 3.1. If it came in 3.4, oh boy, then we're talking about a whole different situation.
In equities, that Dow futures was really volatile right before the number came out. I saw up 2, up 4.
Everybody wants to see a 2 number, though. Everybody and their grandma wants to see a CPI number with a 2 in front of it.
-8, -9. Right now, though, you see it's -60 and counting. Now, that doesn't mean these numbers are going to stick. But when it comes to the interest rate side, I would say that as you look at the 2-year note, which was around 4.54, has moved up to 4.55. It certainly seems though the long end, which moved up from 4.08 to 4.11, 4.12, you want to pay close attention to the long end, especially after we're talking about budgets and deficits. The short end is going to be more about what's going on with the Fed. And before this number, we had the following setup. We had about 60 to 62% of a June cut, June 12th cut, and about 100% fully baked in for July 31st cut. And I'm sure those numbers are on the move.
So, in terms of this, I think we're still looking good for a summertime cut. That's my opinion. I think we're still going to get a Fed cut at some point this summer, probably July is my guess. I think they're probably going to cut 25 basis points. It's not going to be some big cut. It's just a little starter cut, right? I think the Fed wants to see a 2 handle on that CPI before they cut. And we're so close. I mean, 3.1, 3.2, we're so close. But I really think, deep down, the Fed wants to see something with a 2 in front of it for CPI. Once they see that, even if it's 2.9, that's the moment they can say, okay, we feel comfortable starting to cut. I feel like until we hit that 2 handle, I just feel like the Fed's not going to feel comfortable enough cutting rates. And so if we keep coming in 3 something, I think it's going to be hard for the Fed to cut. I think they need to see something with it too. They don't need to see us at exactly 2.0. It's just like a 2.9, a 2.8, something like that. We'll give them the confidence of like, hey, we're in the twos now. We can get away with cutting, because they have to explain themselves, right? They're going to have a million reporters ask them questions. They're going to have to go on Capitol Hill and answer a bunch of questions. Jerome Powell's going to have to. And so when that time comes, and also, if it happens this year, it's in an election year, so people are going to look at that and want to know if it's politically motivated and all those sorts of things, right? At the end of the day, they're going to have to explain themselves, and it's a lot easier to explain yourself if you've hit a CPI in the twos rather than still 3-something, because then it seems like you're still a long way away from your 2% objective. If you're in the twos, then all of a sudden it looks like, ooh, hey, we're in the twos, here we are, right? And so in terms of the market, how does the market react to this? I don't think the market cares that much because it's not that far off. 3.2, 3.1. I think most folks that are in the market probably have my opinion, which is the Fed's going to cut likely this summer, and we're going to hit something with a 2 in the next few months, and that's all the Fed needs to start the cutting cycle, right? And once again, I'm just warning everybody out there, just because the Fed cuts doesn't mean great things, okay? Many times when the Fed starts cutting rates, very shortly after that, you're going to see a recession. And so everybody's getting so excited about the Fed cutting and when they're going to cut. When that day the Federal Reserve actually cuts rates is a day I get more concerned about the market. That's probably a day when I might look to hedge a little heavier in my portfolios, to be honest, because that's a day when I start to worry about, ooh boy, what's coming down the pipe here in regards to potentially a recession, right? That's when I start getting much more concerned about an unemployment recession and those sorts of things. So for now, it's a lot of fun. But once those cuts start coming, I don't know. That's when I start getting a little more concerned. And that's probably happening at some point this summer. But like I always said, if we don't get cuts this entire flip and flapjacking year, that's great news. I'm telling you, if the Fed doesn't have to cut this year, it would be the best thing, because that means the economy stayed great. That means, if anything, the Fed was worried about things being too hot. And if anything, that's a good thing for us, okay? So, everybody that wants the Fed to cut like crazy, I say, the Fed's only going to cut like crazy is if things are getting really bad. Okay, that's the bottom line with that. Now, you don't want that situation, because that's ugly times ugly. Hope you guys enjoyed today's video. Appreciate y'all joining me. If you're looking, whoa, what in the world? If you're looking to apply, join my private group, that's pinned comment down there. That was scary. Oh my gosh. Pinned comment down there, guys. And yeah, we can probably get you in there maybe later this week. Much love and have a great day.